Good morning, Sunsekhar. Am I audible?
Yeah, I can hear you.
Yeah. Thank you, sir.
You can manage Joseph. Yeah, it's just gone. Yeah. So probably a little more sketches. Yeah. Probably. That also Sujita. The lighting part will take care. Huh?
Yeah, that's what I'm checking. Otherwise,
Yeah.
Just wait for a minute for Sunny Johnson.
is not what the user view is.
Okay.
So we're trying to figure out why there's a discrepancy.
It comes out like this only. Okay. It comes on the screen like this only.
No, it wasn't. That's what we were trying
Like
to
I have
figure it out.
joined you, no? So I should be having the same screen.
Yeah.
You can welcome the gathering and get started.
Yes.
Possibly.
So good morning, everybody. And good morning to all of you who are joined virtually. Director sir, with your permission, shall we set the ball rolling?
Yeah, good morning. Go ahead.
Yes, sir.
Thank you, sir.
Sir, you want to say something? You want to set the context, say a few words?
Nothing specific. So, warm welcome to all of you. As we all know that this is one another hybrid panel discussion which we are holding on a very, very important topic. This is event, mega event. Generally, we do many of these hybrid panel discussions for ideating frontier themes and bringing in experts from different viewpoints. This time around, this is on a very, very important topic, basically to deliberate on the next generation stack which India is building. So, in short, I can say that this talks about this particular theme is on ONDC, which stands for Open Network Digital Commerce, and then CBDC, Central Bank Digital Currency. We all know that we talk about blockchain. So blockchain, to what extent is going to radicalize banking and so on and so forth. So blockchain is another theme. And 5G. 5G, as you know, that our country is in a transition into a 5G network, and the moment 5G comes in, it's going to radically change. It's not just about speed, but about so many other things, including the impact it will have or majorly on banking and banking related services is what we're going to deliberate. So this particular theme is basically, we make it a point that people who have undergone leadership programs from State Bank Institute of Leadership for their continuous learning, this is a reach out to them. So we have already on call somewhere around, I think near about 100 people, maybe many would be joining. Today is Guru Nanak Jayanti day. So we are sure that maximum participation will be there. And with all your permission, it's over to the moderator, Mr. Somsekhar, my fellow faculty members and others. A warm welcome, incidentally, to also a cohort of participants from Nepal-based banks. In fact, 10 representing 10 Nepal banks. There is a leadership program going on in the institute, so they're all closeted here, and a few other certification programs which we are running in the institute. They have also been cohort physically participating from the institute, which you are seeing now. Apart from that, we have perhaps about more than 100 participants who are majorly part of our alumni network who have attended leadership programs in the last, say, 1 or 2 years. So we, as you all know, that we are relatively a new institute, having started only in 2017. So this is part of a leadership outreach initiative for continuous learning.
Thank you, sir. May I request Dr. Kanak?
Yes, sir. Thank you so much. Hello and welcome, everyone. I am Dr. Kanak Wadhwani, postdoctoral research fellow at State Bank Institute of Leadership, Kolkata. And I am distinctly privileged to welcome you to the panel discussion titled ONDC, Blockchain, CBDC, and 5G, Impact of These Next Generation Stacks on Banking, conducted by SBIL. We shall now kickstart the session with introductory remarks and welcome address by Shri K.V. Bangarraju, GM and Director, SBIL. Let me take a brief moment to formally introduce him. Sir joined State Bank of India as probationary officer in 1995 in Bangalore Circle. He has served in various assignments in advances, accounts, administration, relationship banking, branch manager, and systems. During the course of his long and illustrious career, Sir has worked as chief manager in local head office, Bangalore, served as AGM in Chairman Secretariat, Mumbai, and worked as Circle Development Officer and DGM Operations at Nalgonda in Hyderabad Circle. On promotion to GM, he is now posted as Director SBIL. Over to you, sir.
Thank you, ma'am. Thank you very much. Am I clearly audible now?
Yes, sir.
Yes,
Yes, sir. Strength
Yeah,
5.
thank you. Good morning to all of you. I extend a warm welcome to you all. We often hear so many technical jargons which have become commonplace like blockchain, bitcoins, AI, machine learning, IoT, and so on. Of course, the latest additions are 5G and the metaverse. Technology is evolving at such a pace that was never witnessed earlier. I have put in 27 years of service in the bank. I can sum up like this. I think during mid 80s, we started computerization. They are basically technology in that period worked as an enabler. And later, during 90s, it has become an integral part of the businesses. And in the first decade of this century, I think technology has taken over the businesses and it has become the main driver of business growth today. And we know that AI and artificial intelligence and machine learning have become omnipresent to drive the business growth today. Long back, I think renowned scientist Stephen Hawking said once, the full-blown development of artificial intelligence will spell the end of human race. Maybe it is slightly intimidating, but it's an indication that the potential that can be unleashed by the new technologies, particularly artificial intelligence and other emerging technologies today. In finance, we also know that artificial intelligence has become the main engine for business growth. Digital and telecom revolution in the country are completely transforming the business ecosystem. Blockchain, the new tech architecture, ONDC, CBDC, and the 5G stack are unleashing new dimensions to the business landscape in terms of speed, efficiency, and customer convenience, and also costs. Bill Gates, I heard almost 30 years back, quoted with much prescience that banking will remain or banking will continue, but banks may not. I think if you see the present trends in the BFSI sector, his prognosis appears to be perfect. In India, the technology has enabled phenomenal changes in the economy beyond imagination. Aadhaar, payment systems, KYC, financial inclusion are such few tech-enabled initiatives that we have been witnessing. I think I'm not the right person actually to speak extensively about this topic because I'm basically a banker, more seasoned in interest calculations rather than talking on technology. I'll stop here. I'm sure that all the participants and the audience will be immensely benefited by the deliberations of this panel discussion. I appreciate Mr. Krishna Kumar, our Dean, for coming with a great idea of organizing this hybrid panel discussion on such an interesting topic and bringing in such erudite panelists for this discussion. So I extend a warm welcome to all the panelists, Mr. T. Koshi, MD and CEO, Open Network for Digital Commerce, Mr. Sonny George, the former CGM and advisor Digital Banking, State Bank of India, Mr. Kashif Raja, founder, returning and blockchain expert, Mr. Prateek Peshain, President, Enterprise Business, Reliance Jio, Professor Krishna Kumar, Dean, and Mr. Somsekar Krishnamani, faculty, Dr. Soma Srivastava, faculty, and all the participants and the audience across the circles, and all my team members from the SBIL. Once again, I extend a warm welcome to you all. Thank you very much.
Thank you so much, sir, for the wonderful introductory remarks. The discussion has lined up with experts in their respective domains and fields. Let me introduce them briefly to you. The introductions are no particular order. Our first panelist is Mr. Sonny George. Mr. Sonny George has varied experience in areas like digital transformation, digital banking, core IT, inspection and audit, credit and retail banking during his career spanning more than 3 decades. He has been instrumental in leading and executing the mega merger of SBI with its 5 associate banks. He is presently leading the major digital transformation initiatives at SBI through its flagship digital banking platform, YONO. A warm welcome to you, sir. I shall now introduce our second distinguished speaker, Mr. Prateek Pashin. Mr. Prateek is President of Enterprise with Reliance Jio. Before joining Reliance Jio in late 2018, he worked with Tata Teleservices, Tata Communications, Taj Group of Hotels, Speech and Software Technologies, Tata Lucent Technologies, and Tata Industries. Mr. Prateek has been the recipient of the prestigious Fulbright Scholarship and attended the Fulbright CIA Fellowship Program of Leadership and Management at Carnegie Mellon University, USA in 2006. We welcome you, sir. Two of our speakers are joining the event virtually. I shall now introduce our third panelist and distinguished speaker, Mr. T. Koshi. Mr. Koshi is the MD and CEO of Open Network for Digital Commerce, a first of its kind initiative globally to democratize e-commerce in India. Mr. Koshi has been a pioneer in digital identity and social protection initiatives and has played a leadership role in many implementations and consulting projects globally, including UID Project of India, the largest such program in the world, along with many other digital ID initiatives globally. And I am Bangalore alumnus. He was part of the founding team of National Security Depository Limited and served as an executive director. We welcome you to the panel discussion, sir. Let me now welcome Mr. Kashif Raza, the fourth panelist and distinguished speaker, who is also joining virtually. Mr. Kashif is the founder of Web3 Ki Dunya, Bit Innings, and co-founder of Crypto Qanun, and a startup mentor, a coach. Mr. Kashif comes with a tremendous experience in sales and marketing, having worked with PepsiCo, Sony Entertainment, and later Disney UTV. Today, he spends a lot of time and energy in his passion, working towards crypto literacy. We welcome you, sir. We have Mr. Somshekhar Krishnamani as a faculty of State Bank Institute of Leadership as moderator for today's panel discussion. Soma is a business leader turned faculty facilitator leadership core. He comes with 35 years of experience, which include military leadership from Indian Air Force, academic leadership of business schools, ranked in top 20 by Financial Times, London, and business leadership. While heading the Corporate Learning Center of a large Indian business house, Soma has facilitated and taught training programs for corporate executives at general manager level and undergraduate and postgraduate level students in India and abroad, and has led cohorts of participants at the president and group president level on international immersion programs. Soma believes in lifelong learning and has continuously upskilled himself on latest management thoughts, skills, and practices. Looking forward to an enlightening experience ahead, sir. Over to you.
Thank you so much, Dr. Kanak. You know, one of the things that normally happens is when you go through the profiles and the CVs, you feel like pinching yourself. Is that this person that, I or the others are here? Don't we feel like that? I'm just trying to set the ball, make it a bit light here. But thank you once again for the introductions. And let me take this opportunity to thank the leadership at State Bank Institute of Leadership for including such a wonderful topic. And special mention to Director Sri Bangar Raju and Dean Krishna Kumar for guiding us towards a hybrid panel discussion on this important theme. We are fortunate to have a great lineup of speakers who come with rich experience in their respective domain. The world changes, circumstances change, opportunities change, and the only constant is change itself. Right? Charles Darwin claimed, "It is not the strongest or the most intelligent who will survive, but those who can best manage change." It may not be possible to predict the future, yet in an increasingly fast-paced digital world, future gazing is becoming an increasingly important necessity in business. So, Let us try and future gaze on a few emerging themes, namely ONDC, 5G, CBDC, blockchain, cryptocurrencies. Hey, what are these? How are these going to have an impact on our life in the days to come? Banks, in particular, must find their place in these changing times. And as bankers and leaders, it is our imperative to be able to harness the potential of the digital tide as we move ahead. Without much ado, let me start the panel discussion by starting off with a question directed towards Mr. Koshi from ONDC. Sir, I'm going to direct the question at you with a prelude. India has taken giant strides in improving citizen services, payment systems, taxation, and financial inclusion schemes. The route to success in these areas has been through creating tech stacks, platforms, and layers. 4 such layers are noteworthy. Number 1, presenceless layer, as in UID and Aadhaar. Paperless layer, as in eSign, DigiLocker, eKYC. Third, cashless layer, as in UPI. And the fourth, consent layer, as in account aggregator model. So the first question to you, sir, is, do you think ONDC will become the 5th layer? Over to you, sir.
You can classify them whichever way that is needed, whether it's the 5th layer or whatever it is. But what ONDC is trying to do is essentially democratize commerce. So I'll just, a few lines on it. You're all bankers and you're familiar with what UPI did. Essentially, what UPI did was to sort of streamline and democratize the payment side of it. And as you appreciate that in any commercial transaction, whether it's for goods or services, there are 2 parts. One is a money side, which is a financial transaction. The other side is the goods and services. So what UPI did was to take care of the one side, which is the money side. And what ONDC is trying to do is similar kind of transformation in the transaction side on the goods and services. So as against what we are familiar today, with respect to the closed networks of commercial for digital commerce, ONDC will have a new open network with every buyer application and seller application giving equal opportunity for any buyer to discover any seller and any seller to be discoverable by any buyer. That's briefly. So you can say that in this transition, in the various network that is built, in the various layers that is built up in terms of transforming the digital, transaction, this is a very significant part.
Thank you, sir, for your introductory remarks and for setting the context. I'm going to throw the second question at our distinct speaker, Mr. Prateek. India's 5G journey has already begun with a rollout in about 13 cities. These include Bengaluru, Gurugram, Hyderabad, New Delhi, Pune, Chandigarh, and a few others. Now, in simple terms, I'm going to ask you a complex question. What is 5G? And what is the difference between 4G and 5G? Over to you, sir.
Thanks, Om. I think Krishna alluded to in the beginning that 5G is typically when you move from 1G to 2G to 3G to 4G to 5G, one factor that keeps improving is the speed aspect, right? India did not witness 1G. We never had mobile 1G. We started with 2G. But I think 5G is more than just speed. And I'll, for you to remember, think of it as a 5G triangle with 3 vertex or 3 corners. One is what you call a speed or enhanced mobile broadband. So today your 4G handset, and if you're on Jio service, will get you good speeds of maybe 20, 30 Mbps on your handset. This can give you 600 Mbps or even 1 gig plus on your mobile device. So that's clearly one element of that, which is the speed, which is what everybody thinks. The consumer says, okay, I'm going to get a better speed. The second corner is what is a technical term. I don't want to inundate you with jargons, but it's called URLLC, ultra reliable low latency communication. To simplify, how much time does it take? So speed and latency are two different things. One shouldn't get confused with that. Speed is the experience of getting a 4K television or a 8K television. That's what speed will determine. But from the time a packet is sent from one corner of the earth to the other corner, how much time delay takes is called latency. So where does latency come in? So we'll give you a couple of use cases to understand what this latency is. We've all heard of driverless cars, right? Now, what does driverless car basically mean? Today, when you drive a vehicle, you are seeing, your eyes are seeing that there's an obstacle on the road or the signal is red. That signal is sent to your brain, which processes, which sends a signal to your hand and leg to say you need to press the brake, right? That is the entire processing time from the vision, from the eye to the brain to the hand and leg, which do the act. Now, in a driverless vehicle, there has your eye is replaced by computer vision. There's a computer which sees that vision. It's processing data, saying there's surrounding, there's a red traffic light, and then it processes the same thing. All of this is latency. So if you tomorrow want to, when you hear of driverless cars, they can only be experienced, they can only come to life if low latency applications are there. 4G latency and 5G latency, there's a world of a difference. So you can sing goodbye to driverless cars. And I'm giving just one example of a low latency. If you do not have 5G network. Another application, if he's an expert in Bombay and he's a surgeon, cardiac surgeon, and there's a gentleman who's in a remote place and he's using a robotic arm. He's moving the hand and the robotic arm is mimicking it and operating on a patient. Whatever actions he does has to be with real time mimicked at the remote location. So if you're thinking of tomorrow robotic remote surgery, it would again need a low latency. It does not need high speed because it's only a data, small packets of data which is being sent to move the arm left, right. So that's an application of low latency. That's the second corner of the triangle. The high speed, low latency for driverless cars, robotic applications. The third corner is called MMTC. Again, simplifying it, it's massive machine-to-machine communication. Okay. When we say we have 7 billion population and everybody's on a mobile phone, IoT is going to be 100 billion of devices. From your dog to your car to everything will be having a signal which will send out a message. So if you are going to think of tomorrow automatic factory where everything is happening without the intervention of people, the assembly line, the car is getting assembled with this. What you're seeing is massive sensors. 4G can handle maybe few thousands of sensors in a given area. This can handle millions of sensors. So 5G offers high speed, low latency, and massive machine-to-machine communication. So if you're thinking of how many factories there exist today which have no human intervention actually, from even quality control, inspection, all of that is happening on automated, which means there are millions of sensors which are sending the message to a AI ML algorithm and a platform somewhere which is processing it and acting it. That's where MMTC comes in. All these three triangles, the vertex of triangle come alive with 5G, which are not possible on 4G. I hope I clarified that. Sorry for a longish.
That was a tough question, but you answered it even better, sir.
Thank you.
Thank you. One simple way to remember would be go back to geometry. The strongest structure in geometry is a triangle. And you kind of brought that out very beautifully using the triad as to explain the three elements of 5G and how they bond together. Thank you so much for that, sir. My next question would be on CBDC, the new way of working. is two in a box, which means business is technology and technology is business. Now, the Reserve Bank of India has taken the first step towards a central bank digital currency, with the first pilot already kicking off. So here's my question to you, sir. How exactly will CBDC function?
Thank you, Som. And you very rightly said that the lines between business and technology are blurred. Okay, it cannot be any other way. Now, the physical notes that we hold in our wallet are legal tender issued by the regulator or by RBI in our country. Then such legal tender is issued by RBI in a digital form. It would be known as a digital currency. CBDC stands for Central Bank Digital Currency. And this is a concept that has been taking off in a very large way across the world. So as you mentioned, or somebody mentioned, pilots are going on in more than 100 countries. Actually, it has been implemented only in 4. 3 of these countries are island states in the Caribbean, and Jamaica and Barbados and another 8 states. And the 4th one is Nigeria. Okay. Now it's a very interesting use case. Why they have done it in the Caribbean? They have done it because the cost of sending physically cash to so many far-flung dispersed islands is very heavy. So it makes more sense to remove the physical cash and just replace it with digital cash. Okay. So to understand what digital cash does, or what is the function played by digital cash, we look at the various types of digital currency that are there. So, and this is true of the pilot that's being done in India, which started on 1st November. So basically there are 2 broad types. One is the general purpose or retail CBDC, which is known as CBDC retail. This is actually CBDC retail is potentially available for every consumer, for anybody, okay, including the private sector companies, non-financial consumers, businesses, etc. Okay? The other variant or the other flavor is the CBDC wholesale, okay, and CBDC wholesale would be used by for interbank settlements. It would be used for interbank settlements primarily by banks. Okay. Now, the retail CBDC is electronic version of cash primarily meant for retail transactions in a digital form. And it is believed that retail CBDC will give access to safe money for payment and settlement. Okay. And the wholesale CBDC, it is expected that it will totally transform the settlement system. So this is on the basis of the type of CBDC. Now, the second, to understand how the different model in which it is issued, it can be issued in 2 ways. One is a direct model or a tier or a single tier model. It can be issued in an indirect model or a double tier model or a 2-tier model. In a single tier model, the central bank would issue the digital currency directly to the consumer or to the user street. And this would be used by the consumer for making payments in a digital manner. In a 2-tier system or a 2-tier model, the digital currency would be issued by the central bank to the consumer through an intermediary. This is similar to what is happening today. Like when the Reserve Bank of India issues notes, the notes first go to the banks and then they are distributed to the consumer on the street. So that is how the 2-tier model would work. And the third thing to understand is what is the form? It can take 2 forms. One is a token-based form, or it can be an account-based form. So the first model that we talked about, the CBDC retail, would mostly be a token-based form, where the holder of this token would be certifying that he is the owner or he is authorized to hold that token. In the account-based system, there would be a system of accounting between banks where they would maintain details not only of transactions, but about balances and settlements that are done. So if you look at it, a CBDC, a digital currency, would perform all the functions that is currently done by physical cash in a much more efficient manner. And there are several other advantages which I will speak on as we go ahead.
Thank you so much, sir, for the introductory context setting and giving us a top-down view of what CBDC is. My next question I would like to direct towards Mr. Raza, Kashif Raza. And I'll just set the context. The history of currency and money itself is very interesting. People did not use money in early times. They bartered goods and sometimes grains. Around 5,000 years ago, the people in Mesopotamia started the use of shekel, the first form of currency. And then this was followed by metal money, and then came stamped metal coins in gold, silver, and copper. Currency in leather followed. In China, they began using the paper currency, which later on made its way across the world. So paper banknotes and coins are still in use, but electronic money is becoming increasingly popular. So one such form of this thing is known as cryptocurrency, which runs on something called as distributed public ledger system, also called blockchain. Three questions to you, sir, right at the beginning. Number one, what are cryptocurrencies? Who owns them? How can a layman make sense of blockchain technology? I'll pause here. I'll come back to you with a third one a little later. Over to you, sir.
Right. First of all, thank you for inviting me. And so you've actually given a right start to the conversation by going back in the history. So what happened, when the mankind was evolving, when the humans were evolving, and just imagine those early days when people were involved in bartering system, during that time, the most essential two things would have come into existence. Once, when I was trading with somebody, suppose I had apples and the other person had bananas. So if the other person was willing to take my apples, so the trade happened because he took my apples and I took his banana, and the trade happened and we were happy. But imagine a situation when he doesn't need an apple. He says, no, I don't need your apple. So the trade couldn't happen at that time. So probably I needed at that point of time, I must have be needing something better, a better solution to the problem. Because if I have shoes and the other person has a house, what he will do with my shoes, and how many shoes I need to give him to buy that house. So there were difficulties, there were challenges during that time, during the barter system. So that means I needed a common form of money, something that can buy me stuff, something that is acceptable to everybody. And probably that is the reason that since beginning, we have seen that money kept evolving. So money is not something that we see today. If we go 5,000-6,000 years back, we have seen different kinds of money. So money is something that was required from day one as the human is evolved. And the second most important thing that we would have required at that point of time is the ledger. Now, as a humans, we have a capacity of a mind to store things. So the first thing that would have came into existence, during that time was how to maintain a ledger, because I was dealing with hundreds and thousands of people. Now, if I am living on an island and if island has 100 people, that was still easy to remember. Maybe 50 transactions with 50 people was easy to remember, maybe. But as we progressed, we figured out, okay, we need money and we need ledger. By the way, the earliest writings proves that when the humans started to write, the first thing they wrote was a ledger. So first of all, congratulations to everybody in this industry and who's listening to us. And if as a matter of fact, banking is nothing but maintaining ledgers, So if we are into that business, probably this business is thousands and thousands year old system. Now this ledger and money kept evolving. Money evolved from seashells to elephant teeth to salt to metals, different kind of metals, then gold. And similarly, ledgers also evolved. Ledger evolved from a single entry system to double entry system that we see today as a debit and credit. And now we are moving towards a triple entry ledger system. So now we understand that, okay, money also evolved and ledger also evolved. So what happened that, we see that gold as a money was served for us for the longest period of time. In fact, gold even today holds a lot of value and it is considered as one of the hardest metal, and it is still acceptable to every nation. And by the way, all these central banks of the world, including India, US, have gold in their reserves. This provides stability. This provides strength to the economy, right? As we all agree to that. Now, gold, imagine a situation, a time when people had gold, uh, and so gold was difficult to transact, gold was difficult to move, gold was difficult to divide into smaller pieces. Now people went to institutions, family offices, and they said, okay, you give me your gold and I'll give you a receipt. And then people started trading with those receipts. Gold was kept at a place and people were trading with those receipts. And that's how fiat money came into existence. Fiat is the paper currency that we see today that came into existence. And till 1971, the currency was backed by gold. We had a gold standard. And in 1971, President Nixon came in and he said, no, 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 now we don't need a gold standard. Going forward, central banks can print as much money as they want to, provided if the monetary system, if the currency notes have a backing of a central government or the government, that money holds the value. But the gold that was providing strength to the paper currency was removed in 1971. So if you see, the primary function of a bank is, if I want to pay you money, the bank ensures that I'm not able to spend my money twice. So suppose if I go to a coffee shop and I buy a 50 rupees worth of a coffee, I cannot, and if I've consumed my coffee, I cannot go back to a cashier and say, hey, give me my money back. You'll say, no, you have spent it. Now you can't spend it twice. So suppose if I'm spending money from Calcutta to New Delhi to my friend, the bank ensures that if I spend my money, I cannot spend that money twice. And this is one of the most important function of the bank, that nobody is able to spend their money twice, right? Now, the only way to do that, earlier when the banks were not there, was to deal in cash. So suppose if I'm sending money to my friend, if I'm meeting him physically, and if I'm giving him 50, 100 rupees, that final settlement, that he has got his money, I spend my money, and the settlement is done. But the role of a bank is when I was transferring money from one geographical location to another, and the bank ensured that I'm not able to spend my money twice. So this is one of the most important function of the bank, as a guardian of the whole ecosystem, of the whole economy. Now in 2008, something happened. So for the first time, it's not that it happened out of nowhere. There were some people who were trying to attempt a better decentralized monetary system. So why they were thinking on those lines was that they realized, those cypherpunks and the people who were working on this realized there has to be a better monetary network where the data, where the systems are not centralized. Okay, so the first attempt was successful in 2008 in the form of Bitcoin. What happened that we have two monetary systems. Before 2008, we had only one monetary system where there was bank, and bank was the only way to transfer value from one place to another, or from one person to another person. Bank ensured that, right? Bank was the middleman, because both the parties trusted that middleman. So these people who were cypherpunks, they said, now how we can remove the middlemen and still people can transact from peer to peer, from person to person. And the first successful attempt was Bitcoin. Before Bitcoin, there were 7 to 8 attempts in the form of DigiCash, BitGold, but they all failed because at some point of time, they required a middleman. For the first time in 2008, when Bitcoin came in, it proved that you can transfer a monetary value, you can engage, you can send a value from person to person without trusting or without involving a third party. So basically, in a centralized network, bank role was to ensure that double spending should not happen. I should not be able to spend my money twice. So in decentralized network, when there is no middleman, when there was no bank, when there is no single individual who governs the network, and still the network is running and nobody is able to spend their money twice is the innovation. So the real innovation is that without a bank or without a central financial institution or a central governing body, you are still able to run a monetary network in a decentralized way. The network is run by people, and still the network is such that you're not able to spend your money twice. That is the real innovation that has happened, and that is the reason this ecosystem is flourishing and growing.
Thank you so much, sir. That was a fairly longish answer, but I'm sure a lot of us got some of it. Some of us got very less of it. So I'll come back to you with the repeat question on that one, right? What I'll now do is I'll go on the round robin league, and I'll try and pose my next question to Mr. Koshi. Sir, the experts are saying that there is unfair competition happening. So do you visualize the ONDC to create a radical change in the way in which MSMEs are likely to sell their products in India?
Let me give a basic explanation how ONDC is different in enabling digital commerce as it is being done now. So what I'll do is I'll give a simple example, taking us back not on the commerce side, but on the information sharing side. If you remember, when TCP/IP came, distant machine-to-machine, computer-to-computer communication became possible. And those days, the wide area network was used by geeks to share information. Then came Tim Lee, who came and said that I'm going to create a protocol, and that will help, easy communication, what we are familiar with the idea of WWW. So what he did was he said that this protocol is not anybody's private property. It is going to be a public good, and anybody can build applications on the top of it to communicate and to sort of share information. So if I just give an example of the implication of such an open democratic way in which this protocol enable communication is that, let's say that I create a web portal called Koshi.com, which is I can do if I know how to do some coding on HTML. And let's say that SBI has another called SBI.com. Both have equal visibility in the network, in internet. What drives the traffic to Koshi.com or to SBI.com is it relevant and interesting to a set of people? If more people find Koshi.com and the information relevant, they get more traffic, and vice versa. So what means that what drives the the traffic for information to a portal is what they have to offer. That's the way the information dissemination. So internet started as a democratic world. I'm just trying to make it simple. Now, when it comes to commerce, we took a different route. What did the route that we take? We said we will use network using proprietary technology. So you have few platforms who use proprietary technology to manage transaction end-to-end, which is the building block of transaction from seller interface to buyer interface to payment to logistics. Everything is handled by large platforms using proprietary technology. As people who are familiar with the economic theory understand that if you have proprietary network, the network that manages a significant volume first will be almost in an unseatable position. That's the reason in any of the domain of commerce, whether it is goods, e-commerce, or in mobility, or in transport and everywhere, we have concentration happening between 2 or 3 players who manages to have the complete control of that sector. And irrespective of what practice they use, this network effect will ensure that there is more and more concentration. So this is a situation all around the world. So in fact, that has become a challenge because this concentration is of such economic power also is lead to certain practices which may not be at the best interest of the economy at large, and especially when it comes to small and micro enterprises. So this is something that is a concern all around the world, and the American developed countries, and it is equally applicable for developed and developing countries. Probably some of you are familiar that the Americans have tried to develop what they call a regulatory approach of America Innovation and Online Choice Act, which is trying to attempt certain discipline in this concentration, and the Europeans are trying to do by Digital Market Access Act, which is trying to bring some amount of discipline in this thing. What India is trying to do is to make sure that technology and markets with enabling policy will address this issue. So that means the market concentration will not be allowed, will not be possible, because we are using a protocol that will enable unbundling of components of transactions and make them all interoperable to provide seamless commerce. So if I just go a little more, today let's take the case, I'm just taking an example, let's say SBI. SBI has a large number of digital consumers. I'm talking about retail consumers one, then we'll go to the other side. Today, it is very difficult for them to make e-commerce available for all the consumers, because they don't have the, if they are to make it available, they practically have to tie up with as many sellers directly or indirectly to make it possible. Same is applicable for, let's say, a telco, like for example, Airtel. They have a lot of digital consumers. If they want to make digital commerce available, they have to have some direct or indirect tie-up with sellers. And without that, they cannot do. Imagine for a second that all sellers are able to make their catalog visible in an open network. Then that becomes less of a concern. So anybody can now have a buyer interface which will have the visibility of the same seller pool. So we'll be able to do and we'll be able to discover. So that's how, instead of active buyer base of platform A or platform B, the buyer base of the digital consumers, 1 billion of them, brought together, brought into a common pool by SBIs and Airtels and Paytms and all together, which is available to everybody. If you now look at the other side, the seller side, is that the seller platforms, now it doesn't matter whether you're a big platform with 100,000 sellers or if you're a small platform with 10 sellers, you are equally visible. So that's a reason today, if you look at the exclusive platforms that is there and their terms of trade, which is determined by them, in a way sort of restricts the participation, limits the participation of a large number of sellers. If you look at the statistic, the seller participation in the digital commerce today is 1 to 2% only. Because the conditions that is available, etc., is not comfortable to all of them. So now tomorrow what we are going to see is that we are going to see a large number of small and big specialized platform making the, whether it is big customers or micro sellers, making their catalog visible, because they don't have to worry from where the demand comes. Demand will be brought by all those platforms. So in this kind of equal opportunity, what ONDC is providing is equal opportunity for anybody to make their catalog visible to a same set of buyers and prove their worth. Somebody may say that I want to be a global national player and I want to sell to everybody, and somebody may say that I am creating a very specialized kind of products which is relevant to only, if say that Tamilians who are staying in Delhi, doesn't matter, I'm just making some arbitrary example. They all have equal opportunity. So this, because of this equal opportunity that is being provided for any seller, the opportunity for the small and micro enterprise become larger, because who might be meeting their interest, or even they themselves can buy, because so long as they are able to make their catalog visible, they have equal opportunity. So if I just give one more example, like taking from our web portal time, somebody may create, I may create my own web portal because I know HTML. Somebody says that I don't need a very sophisticated one, I don't know web portals, I use something like a standard solution like WordPress, or may get to a third party. So in the similar fashion, in future, anybody who has a product or service to make available to a large pool of consumers will be able to make their catalogs equally visible and have equal opportunity. That is a fundamental shift of unbundling and interoperability is the fundamental shift that ONDC provide, and that is going to enhance a significant competition as against a natural market concentration happen in a proprietary technology-based platform.
Thank you, sir, for the clarification regarding the unbundling. Now, we are receiving some questions, from the virtual panelists or virtual participants also. Before I take one and throw at the distinguished panelists, there are folks who are sitting here in the hall. What I would request all of you to is also organize your thoughts and keep your questions ready, right? So it is time now for us to start thinking about which questions you want to ask and whom do you want me to direct to. But let me ask one question that has come and specifically directed towards Mr. Prateek Pashin. And this is coming from one Mr. N.K. Chari. How fast can we provide all technology developments to remote areas and hills of the country? Looks like he's from Bengaluru. The Chari person, it looks like that. I'm just giving a heads up. Maybe he's experienced 5G. But what are your thoughts on this? Is there any government directives on these kind of expectations, sir?
So there are no government directives, but I think the sheer benefit of what 5G offers to consumer, you will see proliferation of 5G very rapidly. Our own chairman has said that every district, every taluka, every tehsil would be covered by 5G by end 2023. So in about a year's time, you will have at a taluka level a 5G connectivity. So that would get enabled, and I think it's a great enabler for banking, and that's, I think, the most important aspect. And we'll talk about it maybe whenever about what, while 5G has lots of benefits for a lot of industries, what are the benefits that 5G offers to banking industry? And I think that's what would be of interest to the participants here. So we'll talk about that.
Right. So yeah, thank you so much. My next question is going to be towards Mr. Solis. There seems to be a perception, sir, that CBDC will take away the intermediary role of the banks. Do you agree to this? What are your thoughts on that?
That's an interesting question being posed in a group which is largely being attended
They're all
by
bankers.
So let's look at it from like two aspects. One is like basically it has been primarily introduced, CBDC or digital currencies have been introduced as a method of payment, like the physical cash is there. Okay. So and the presumption is physical cash does not bear any interest. So digital currency also should not bear any interest. But there have been some thoughts by some of the industry experts that why should digital currency not have some interest? Why should it not bear some interest, some positive rate of interest? Their argument is that it will be the most effective way to transmit monetary policy. Today, monetary policy is transmitted through the overnight money market. Instead of that, if you offer a direct deposit rate on this digital currency, it would be a better way of implementing whatever policy directions you have in monetary terms. Now let us look at it like what would happen in such a scenario. While these are only thoughts emanating from a certain section of people, what would happen if this is implemented? Now suppose the central bank was giving a rate of interest or a positive rate of interest on digital currency, it would automatically become a very attractive mode of investment for the customer. For customers would definitely love to put money in this. For one reason is that it's absolutely safe. There is no risk at all. And secondly, you're getting some remuneration and you're getting interest on it. Now, if this were to happen, what would banks do? Banks would be looking at an enormous amount of disintermediation, because people who were actually depositing cash with them would now go and put it in this digital currency. How would they react? Now, what they could do is, in such a scenario, they would offer a higher rate of interest on their deposit. Like if digital currency is getting you so much, add 1 or 2% more on that, and you try to attract your customer back. Now, what would happen in such a case? What would happen is your cost of borrowing would go up. If you don't want your net interest margin to drop to abysmal levels, you would have to increase the cost of borrowings too. So this would be your loans be more expensive. This is the scenario that would happen in such a case if digital currency were to have positive rate of interest. But this has not found much favor, and in fact, the thinking is not in these lines currently. Now, as far as the other flavor, CBDC wholesale, is concerned, there is also a fear. Like, not only in case of CBDC retail with positive rate of interest, but banks are also worried about what will happen with CBDC wholesale. If you're offering a much more efficient system of settlement of transactions, would customers move away from banks even for their current accounts? Here also the thinking is, current account is not just one service that banks are offering. There's a relationship involved here, and the current account also involves many other services provided by banks. So here also the feeling is that banks do not have much to worry about for these cases. So we have a positive takeaway from this question. While the future no one can tell with certainty, but I feel that there is not much risk in this.
Shall we put a round of applause for that? Because it sounded positive at this point, right? As bankers, right? Because all looked a little morose. I think it is time to at least clap and
Just to add on one more point to it, already the first lot of CBDC transaction wholesale has been done. About 250 crores of interbank transactions have been done. Much in the same length as what Sir was talking.
Thank you, sir. Thank you for those insights. My next question would be towards Mr. Raza. Now, there is news about a consortium of about 15 banks who are joining together to create something called as a blockchain infrastructure company private limited. Now, any thoughts on why banking is entering blockchain in such a big way?
Yeah, so what is happening as we are progressing. Now, once the technology came into existence, the distributed ledger technology came into existence, and as we see that first Bitcoin came into existence, and after that Ethereum, the world's first programmable blockchain, came into existence. Now, what Ethereum did was basically that you can write smart contracts on Ethereum, right? Because to answer your question, this is important, that why banks are entering into the blockchain space, or they're embracing the distributed ledger technology. So as Ethereum came into existence, it said, okay, now you can write smart contracts, on blockchain, and you can store them, on blockchain. Just to give you an example, say suppose today I want to take a loan, and I have a house, and if I put it as a collateral with bank, and I say I need a 5 lakh rupees loan, and I'll pay you in 5 years. So suppose if I don't pay it in 5 years, I have signed an agreement with the bank that suppose on the 5th year, if I don't pay my amount, you will sell my house, right? And there is no dispute in that because I've signed that. Now imagine that physical agreement, if that can be codified as a smart contract and put it on a blockchain that gets executed automatically. So suppose if the condition is met that if I'm not able to pay the loan and you sell my house, similarly, that can be codified and put it on the blockchain, and the transaction gets executed automatically, right? So what is happening that whatever the bank does is getting automated in the form of a code, in the form of a smart contract, and that is being put on the blockchain that gets executed automatically. So whole DeFi sector is getting disrupted. As we move forward, we will see that more and more decentralized finance will evolve. Now, just to give you a perspective, when the market was at its all-time high, the total amount of asset that were committed on DeFi protocols. So when I say DeFi protocols, it's like a banking system in the real world. So in the crypto world, DeFi is the banking. So decentralized finance protocols. On that $250 billion worth of assets were lying there. At present, when the bear market is there, it is 50 billion US dollar. So what we are seeing that banks are also seeing an opportunity in it. In fact, week back, JP Morgan attempted their first DeFi transaction on Polygon. So that just says that banks are trying to harness the opportunity here. Now, what this consortium will do, so all these banking infra, why they are eyeing this as an opportunity is they're trying to come up with a solution that, okay, there are certain issues with the open blockchains, like in terms of, pseudonymity, KYC, how the transactions will move, know your customer, how to track crypto, the travel rule, all these certain challenges are there with the public blockchain that can only be addressed when the banking system and the institutions, they come together and figure out, okay, fine, this is the opportunity, here were the challenges, how we can figure out those challenges and how we can meet them. That is the whole objective of forming these associations. But the technology as such seems to be robust. Yes, it has challenges, it is on a very nascent stage, and as every technology has seen their own set of challenges in those early days. But probably we have come to a time where institutions are now taking it a little seriously.
Thank you so much, sir, for your response on that particular question. I'm going to direct my next question towards Mr. Koshi, and this is more directed on a topic where the bankers would be interested to know. There is skepticism among banks regarding UPI. With UPI turning out to be a blockbuster, many banks now want to board the ONDC bus, and they want to board this very early. Some of them are also showing tremendous interest. So the question is, what is in it for banks? Over to you, sir.
Yeah, there is lots of in it for banks and multiple areas. So, I would like to announce that there some bankers have already taken the initial steps. And in the ONDC network, 2 bankers are already sort of about to go fully live in the next few weeks. They're under testing, and some of the others are under early parts of testing. So if I look at, just briefly explain what are the possibilities, multiple. One is that, like I said, in the unbundled open network, the bankers can directly or indirectly become a buyer application. When I say indirectly, probably with some strategic arrangement. If I just use the word, since I saw the person from is there, I can say can be the buyer application. Okay, and I understand that they are seriously looking at it. And similarly, equal opportunities are there. What it means is, we are now able to, the bankers, if they set up directly or indirectly the buyer application, can now offer a variety of direct access to products and services. If I just give an example, let's say talking from a banking point of view, let's say I have a bank account with one bank without being the name. See, I just give an example. Let's say when those banks started offering all related like mutual funds and many other products in the financial sector, while I had access to all the other ones, it became comfortable for me. That's my nature. Somebody else may have different nature. But they started bundling a lot of related products. Now imagine now they start giving me all the products on where I want to buy. It could be my weekly grocery purchase, or it could be my high-priced mobile phone purchase, or it could be my taxi hailing, or it could be my hotel booking, or it could be my, the air ticket booking. All of them are now available in the same platform because the bankers need not to go and tie up with all of the integrated one. The network is there. They only need to give a buyer interface. And when it's possible, probably if I'm buying a high-priced mobile phone, the bankers will come and say, hey, Koshi, I'll help you with the credit. So there is a possibility of giving a very broad-based service offering to the existing customers on the buyer side. Similarly, let's look at the seller side. Probably there again, bankers directly or indirectly can aggregate a seller platform. Now they are saying that, hey, my corporate consumers, you don't have to worry about going and tying up with a platform to sell your product. I am enabling I will come through me, I will enable your catalog to be visible to 1 billion consumers which are there independently. And now the bankers has advantage that, hey, now that let's say I'm as a, shoe manufacturers, they're already a, account, I have the business account at the bank X. Now bank X would know about my business only when the money comes there. Now that since I have the trust in the bank X and bank X can now made available the seller platform, you can see dot by dot, tick by tick transaction. So you know that Koshi's shoes business is going well, and the new products that is launched is doing well in North India. All those information available based on which, because of course with the consent that is, because I have the trust, that's why I made it available to you, and you will be able to make specialized product. And a lot of time it could be, even when it comes to small and medium enterprise, it could be based on this flow. You might be able to give me flow-based lending instead of waiting for my assets, and that way you can even help a lot of small ones. I just gave you a couple of examples. So you might be either being a seller platform, or you might be through your other platforms like Hoken or Account Aggregator, etc., offered to a broader cross-section. So the kind of opportunities are huge to participate in the digital commerce. And if I just give a picture of probably in 4 to 5 years' time, everybody who has something to sell will be digitally present. Okay, and the appropriate buying application will make it possible for them to buy. And today, if you look at, if I'm a brand manager of, let's say, shirt brand X, all channels are in my control except the e-commerce, because that is controlled by an intermediary. Tomorrow that will become irrelevant, and I will have the equal opportunity like any other seller. So you're talking about a complete transformation. Just adding one more one, even it's not just in B2C, it could be B2B. What could also happen is now that it is also giving an opportunity to unbundle product and credit. Okay, because of the flow-based lending that is possible. I'm not elaborating, you guys will be able to figure out you are in that. So that will also see the significant transformation in supply chain. So that also puts a lot of thoughts in your mind that in this transformed world, how would you be playing in this game of transformed digital commerce is something that you have to look at, and also feel excited about the amount of opportunity that is throwing up to people like you.
Thank you, sir. I'm sure the participants who have listened to this response will be taking notes, and they seem to be excited at the opportunities arising. The next question would be towards Mr. Prateek. You spoke about the benefits of 5G specific to auto industry, manufacturing, in some sense, healthcare, transport, and education also. So the one point that we are still wanting to ask you is, what does this mean for banking in general and banks in particular?
Sure. So while explaining it, I used different industries. It is as relevant to banking, and and to the banks. What I mean by that is your interest in saying what is it in for me and my customers. So I think a few things. One, the footfalls in the branches are reducing, right? And everybody knows that. So how do you reimagine branch banking tomorrow? That's, I think, the question in everybody's mind. Every bank is kind of figuring out what next to do. And if India, 70% of the population is below 35, and they've never visited a bank branch, and they are multiple surveys say that they're very comfortable with a digital bank or a private or a virtual bank, then what do you do with the real estate, prime real estate that the banks have? And I think that's where one use case of 5G comes in, saying how do you make it an omni-channel and an immersive experience? When a person indeed walks in, is it just for opening a bank account or kind of doing a loan application, but can that customer connect with an expert who might be sitting elsewhere? So it could be a bank branch in a remote area who may not have all the services of the bank, but through video means or digital means could connect. And it doesn't matter now because you've got connected on 5Gs, you've got great experience, connectivity is taken care of. Can you connect with the experts wherever they are? And you're then reimagining what banking is going to be. Banking doesn't then, or a bank branch doesn't mean those 12 counters where specific people are sitting, but each of those 12 counters could be repurposed, because now experts are there, and those 12 counters are your 12 rooms, if you will, of one connecting with a investment advisory person, so another connecting with a loan expert, third on a mortgage. That's on the bank branch experience. Let's go to the ATM. Is it only for dispensing cash, or can you convert that into kiosk banking? Can you have a live conversation with a bank advisor of doing certain things, because it's now possible because of the rich connectivity. Most ATMs, by the way, when we experience 30 Mbps or 400 Mbps at home on a broadband connection, I don't know how many of you know your ATMs are connected on a 128 kbps connectivity. Because you only need zeros and ones to say send message, received. You could transform ATM experience through 5G. The third, and that's the third is, if indeed the face of the bank is not going to be your bank branch, but this smartphone and the app, how do you make it more immersive? If fintech companies are eating some of the bank business for lunch, how do you move and bring those customers back to, I mean, SBI is my parents' bank, it's my bank here. How do I make sure that the SBI is also my son's bank? If you have to do that, you have, if now I'm never going to be visiting a bank branch, how do I connect with the customer? Which means we talked about metaverse, right? How augmented reality and virtual reality and extended reality, mixed reality, can help you process a bank application. I don't know what 14 pages of form that I have to fill. Can I do it with a bank officer remotely through metaverse? Asset inspection has to be done in a remote location. Does that mean I have to send a person for that asset inspection, or through metaverse I can see the health of the asset, 360-degree view, the condition, all of that would become possible. The third is, lots of things are happening in the bank. How do I make sure that my last employee on the ground, who could be in Himachal or could be in Assam, gets trained on this? Learning and development actually is one of the big use cases for metaverse, because now, rather than a boring YouTube session or this session where we don't even know half the people what they're doing and multitasking, can I make it an immersive experience? Can I make it a personalized experience? So for learning and development, for your next Gen Z customer that you have to attract, how do you create that personal connect through metaverse and 5G? You will see across the use cases, and be it from a customer, managing your employee, running your operations of asset verification remotely. I think 5G has use cases for all of these. So I think we're going to see some exciting things, and I think maybe we'll transform the branch banking to a new way of doing things.
Thank you so much, Pratik. That was wonderful. So another class where I've heard another professor talk about this very succinctly. He talks about personalization going to a level where it is not about the highest common factor, but it is about the least common denominator, trying to bring it down to the least common denominator of one individual. And even that one single account can be actually sliced and diced so that multiple users can use it. And the same thing that I can keep changing my preferences on a day-to-day basis, something akin to Netflix. Like today I watch, Mani Ratnam movie. In 3 hours time, I can watch Steven Spielberg movie. So the personalization possibility is tremendous. Thank you for highlighting that. My next question would be to Sony John. Now, is CBDC aiming to take on the cryptocurrency menace, sir? There seems to be some news doing around this.
So answering that question would be hazardous when you have an expert. Like
I know that. I'm putting you against
Mr. Raza. But I will still hazard.
No, that's perfectly fine. I think, and
that was deliberate, sir.
Yeah. So I believe, so before, just to give you, I really believe that CBDC does have its own this thing, potential, and I'm looking forward to hear that, sir.
I thought that you're going to answer the question and would back to you.
We were seeing it.
I will definitely make an effort. So CBDCs can impact cryptocurrencies in two ways. One is because of the trust that customers would have in CBDCs. Why? Because CBDCs are you mentioned, I think Mr. Raza, you mentioned fiat money. Okay. So CBDCs are the digital representation of fiat money. So by the very definition, by the very nature, citizens would trust fiat money even if it is fiat digital currency. Okay. And there are three reasons for this. One is it's backed by governments. Okay. It is a liability of the central bank, and it is protected by regulation. So that seems pretty straightforward. The other reason is that central banks have the power to determine or to direct that all non-fiat digital currencies are not legal. So they have that power. And in most countries, the central bank is by law is empowered to be the sole issuer of legal currency. So they have that in their charter itself. This puts them in a privileged position to issue a new currency, and such as a digital currency when the need arises. And once they do that, they can announce that all non-fiat currencies are not legal or they are illegal. Like already many central banks have issued strong warnings against the use of digital currency. In fact, around 4 countries the central banks have already banned cryptocurrency. I think it's Algeria, Bolivia, Morocco, Nepal, and Pakistan, and Vietnam to a few countries. Now, the other reason why there could be some action by the central banks is the great interest from individuals and businesses in the private digital currencies or the cryptocurrencies, which would put pressure on central banks to take leadership in this space. And as I already mentioned, once they issue their own digital currency, it would be a logical sequence to expect that the central bank would then thereafter say that the cryptocurrencies are not legal and should not be invested in. Some of the central banks may take a slightly more enlightened view, and they may say that, okay, you may invest in cryptocurrencies as an investment for investment purposes, but do not use it for payments or transactions. I think, Mr. Raza, if you could give your thoughts also.
Yeah, shall we, do a jugalbandi there?
Yes, sir. Yes, sir. I like to do that, sir. I think it's a very important point. And first of all, the benefits of CBDCs are definitely there. The whole point is right now, what CBDC will achieve that we are not able to achieve from our existing digital infrastructure. By the way, our digital infrastructure is a real massive, infrastructure, and the world is acknowledging that. We have seen the massive success of UPI. We have seen the massive success of RuPay, and the whole NEFT RTGS system. We are far ahead of even the countries like US, country like most of the countries in Europe. They are studying the Indian model and they are trying to implement the same model in their own country. So if we talk about digitally, we are far ahead of most of the other nations. Today, whatever we can do with CBDC, we are already doing it through our existing, digital infra right now, number one. So why do we need a CBDC? Why do we need a CBDC that the existing system cannot do, number one? Number two, if suppose I am a citizen of this country and I am told that now you can also have CBDC, what is my motivation to use CBDC? What is that motivation that I cannot achieve through Paytms and UPIs that I'll be able to achieve through CBDC? Now, I'll try and see, am I getting some more interest to keep CBDC? Now, if suppose a central bank says, okay, now if you keep CBDC in your wallet, you'll end up getting say 8%. or 5% or 6%, more than the commercial banks. Now then, if we'll do that, the commercial banks will come into trouble, because people will start moving their money from commercial banks and they'll start putting in money in the CBDC wallets. Now the banking infra will collapse because there will be a liquidity issue. So obviously RBI is in a confused state of mind at this point of time, that whether to give interest or not. If they don't give interest, if they treat it as cash, then I don't have incentive to use CBDC, because I don't want two wallets. Why there is a, maybe I can push that to certain people, but you want the pull strategy. You want people to demand that. Today, UPI is demanded by people. UPI is something that people cannot live without it. That has become a daily routine, part of their life. Now, why I will go to CBDC? That's important. Number three, uh, now CBDC, while it will be really helpful in the cross-border transaction. So suppose if I want to today, India is one of those countries where we get close to 80 billion US dollar plus worth of remittances. Now on 80 billion US dollar, Visa and MasterCard, they take away close to 6 to 7% of that. Now imagine they take away more than 5 billion out of our hard-earned money that Indians, they send back this money to India. Probably on that side, we can end up saving that. But there is an issue. The issue is that if somebody is living in UAE or somebody is living in US, will they be allowed to hold a wallet, CBDC wallet in their mobile phone in a different country? Now for that, I need to convince the US government, or I need to have a sign a pact that they should allow the people in those countries to have a Indian CBDC wallet on their mobile phones. So even then, I need to have an IMF in between who will help all the who will act as a bridge, so that CBDCs of different countries can work in a world where things are very centralized. Rather, there is a very unique approach. It has happened recently. Norway has decided to launch their CBDC on Ethereum. Now, Ethereum is a public blockchain. Norway, as a country, for the first time, is experimenting to launch CBDC on Ethereum blockchain, now which is a public blockchain. Still, it is in a sandbox mode, but they are experimenting with that, probably for 2-3 reasons. The one reason is that we have seen that stable coins have grown a lot in the recent past. USDT, USDC, as a ERC20s have grown a lot. To counter that, maybe India has an opportunity today to launch their own stable coin backed by INR, so that it grows in acceptance. Because the moment you launch something on a public good, on a public blockchain, the acceptance, the market is huge for that. The Indian-backed stablecoin, the INR-backed stablecoin on Ethereum probably can be used in DeFi sector that is being built on Ethereum, the whole financial sector. Tomorrow, the NFTs can be sold in INR-backed stablecoin, and even all the cryptos today, when they get sold, they get swapped with USDT and USDC stablecoin. Today, we don't have an option like that. Maybe tomorrow, INR-backed stablecoin on Ethereum could have been proved to, would have grown in acceptance in the global market. CBDC is amazing, but it will remain amazing within the boundaries of our nation. We want CBDC to really grow. We want, CBDC to solve the monetary reform. We want to actually proceed. We don't want a payment reform right now. We are already doing amazing stuff in payment reforms. We want a reform in the monetary reform. We want our INR to go stronger in comparison to USDC. We want INR acceptability to grow in the world. So we should rather think on those lines of growing the INR acceptability and INR demand in the global market, rather than growing the ecosystem within the country. Probably CBDC is a great opportunity for us if we just think a little deeper and go a little deeper and think about launching it on a public good.
That was very well. That was very, very well articulated, sir.
Thank you.
So here's a question, the wonderful question. I'm sure this is running through everybody's mind. Is there a vision that combines ONDC, 5G, CBDC, and blockchain? So this has come from Raunak Jain, and he's very clearly said that I am not directing it at any of the speakers. So this is an open question to all four of you. Who would like to take it, sir?
I would say connectivity is implicit in all of these, right? Whatever platforms, if they have to exist, you need the basic fabric of connectivity. So that would be present irrespective of what we talk about. So, and higher speed, lower latency for transaction settlement for whichever form you take, that's implicit. So 5G is already embedded in it. We can talk about the other platforms.
Any other thoughts, Mr. Koshi?
I'll just starting from where our colleague just said, 5G is going to be the biggest enabler of making digital commerce much more prevalent all across. So that way, these kind of connectivity significantly stimulates the adoption. Second thing, whether then the other side, digital currency is about a payment side. So if that is making the in any way significant impact on the payment side, which definitely will, like earlier the other colleague said, will probably an icing on the cake on streamlining the business. I am not an expert on the money side, so I leave it to the experts on the money side. Blockchain, like you said, as of now, I had been asked this question whether I could sort of use a DLC for the whole ONDC. At this point of time, may not be, the kind of maturity of that technology to sort of give the kind of dispersion that is needed may not be there. But we are seriously looking at whether that can further strengthen. In some components like the network-wide reputation, etc., and rating, we are sort of started experiment on it. Essentially, the point is that since it's a more, as it become more prevalent and more adaptable, and the cost and comfort of adoption by a broader cross section will come, so we will be looking at it. So whether it's question is today, but since the question is very futuristic, I definitely do feel that they will all feed on each other and help each other.
Yes, thank you for summarizing that, Mr. Raza. Your thoughts on this, sir?
Yeah, so everything is ultimately interlinked. Technology, internet, everything is interlinked. What blockchain is doing basically, blockchain is helping helping the world. So now today with certainty, blockchains have this intrinsic one of the feature is that they are immutable. The data once stored there is immutable. The public blockchains are highly immutable. They cannot be changed. The data cannot be changed. Number one. Number two, there are many applications that are being built on blockchain. As the internet grows, as the internet penetration grows, in India, definitely we are one of those privileged nations where the internet is really growing very fast. The vision of our leadership is so amazing that the infra is growing, the internet is growing, it is reaching far-flung area. But internet is still a luxury in most of the nations around the globe. In Africa, you see internet is a privilege there if somebody is using that. In US, internet is so costly. I mean, in Middle East countries. So as the infra grows, as the infra is accessible to people, as the distributed ledger technology grows, as the applications that are being built on this, this rail will grow, definitely the overall ecosystem, the e-commerce and all these things, the economy, the creator economy, the different forms of economy, digital economy being built on these rails will ultimately flourish. There is no doubt about that.
Thank you, sir. The participants who are sitting here in this hall, would you like to throw a question at the distinguished panelists, please?
Floor is open.
The floor is open. It is Q&A time. Some of you are just, organizing your thoughts. I have a couple of questions which are there in front of me. And one of them is on the CBDC. So it's directed towards Mr. Sony George. The question is coming from Mr. Sujit Kumar. And he's asking, is there a possibility of a single global digital currency that will replace the need of US dollars?
Amazing question.
Why no? By definition, no, because CBDC itself stands for
Central
currency that is issued by the central bank of your country. Now, but that doesn't preclose or does not prevent if all the countries get together and they decide the mode of interchange or how do you translate the value of one CBDC to another. So that also may be possible in the future, but I feel there's a long, long way to go.
One follow-up question, sir. Now, this is from Mr. Mohanty, and he's asking, one of the greatest advantage of physical currency is that it can provide anonymity in transactions. So, but how would CBDC expect to provide that, because it is going to capture trails?
So it's not a. See,
I don't know whether he's a trader or what, but he's asked a very nice question.
The basic thing here is that when we did demonetization and digital payments grew, the traceability of transactions have multiplied manyfold. CBDC is also, in my opinion, a step in this direction. Anonymity definitely is not one of the key characteristics of this product.
Thank you, sir, for that. Now we have Mr. Chari coming back and is pointing a question at Mr. Pratik. He's coming back to the point again. I find most mobile networks use BSNL as a backbone for transmission. Is Jio having its own backbone to transmit data?
So, Chariji, I think it used to be, no longer. For example, Jio has 700,000 kilometers of fiber across the country. Without naming the armed forces, one of the armed forces, in fact, have taken fiber from us to connect in the forward areas, to connect in the border areas. So they, in fact, the armed forces also leaning on to a provider like Jio to get forward-based connectivity. So it's no longer true that Bharat Sanchar is the only operator in town. And in fact, we all know about the economic state of the national telecom operator. So most of their infrastructure is about 20-30 years old, and hence the reliability of that also has is a issue. But I don't want to comment on my competitor. But to the small answer, Jio's network today is definitely India's largest, probably the world's largest as well.
Yeah, thank you for it was a pointed question directly at you at Jio. So thank you for taking it on your chin, sir.
Chai, what I will do is I'll make sure that you are well connected. I'll take the
So here's another question from Mr. Shiva. Most of them seem to be more interested on the CBDC, again directed to Mr. Sonny George. What would be the impact of CBDC on UPI and the digital payments which are already doing the rounds?
Okay, so basically,
wallets.
Yeah. So basically, there's a value beyond cannot transact on UPI and digital. The first possible difference could be that there would not be a ceiling on transactions through digital currency. That would be the single most reason for people to migrate to UPI. But I would also, that is my understanding. I would also like to hear what Mr. Raza has to say about this.
Sir, there is no doubt that RBI and the other central banks all over the world they want to give people an alternative to virtual digital currencies or the private cryptocurrencies. There is no doubt about that. This is also considered to be one way of dealing with the situation right now, right? But the whole idea is that despite the fact that it's been more than 5 years that more than 97 nations and half of these central banks of the world are trying to come up with a solution in the form of a CBDC. But till date, if I talk about a major economy, only China has exceeded to some level of launching that platform and coming out of that a pilot project. But all other nations are either India is probably the second major economy. Not even US and not even countries like Europe are ahead in this. So there seems to be some confusion or some challenge is there because they are trying to evaluate that will this be a successful way of achieving our goal or not? Will the private cryptocurrencies will vanish or they will immediately get shunned by people or people will not use that? The latest numbers are showing that the ecosystem is growing. The virtual digital assets are growing. The use case of those of that industry is growing. DeFi, NFT, metaverse, all these ecosystem, all these different use cases are growing. It is still very early days for the industry as well, but now governments are also realizing that how they can harness the potential of that industry. That is the reason US still is watchful, but it has not banned it. Europe, even Europe countries like Germany and all are watchful, but not banned it. In Middle East, UAE and other Middle Eastern countries are, in fact, they have embraced it to a level where they have really, allowed various crypto companies to have a base in UAE. UAE is flourishing. So countries are watchful, but they're not against it. CBDC is definitely an alternative. Their governments are trying to prove it as an alternative, but these are very early days, and we haven't seen one successful example yet where CBDC was able to, over exceed or was able to achieve the goal. It is these are very early days. As we see, it will be interesting to see how things evolve in the future.
Yeah, it looks like we need to keep our fingers crossed on this.
And
suggesting
if I can add one more point, last point, uh, there is a news recently where somebody asked this question that can we have one common currency in the world? In fact, we used to have. Gold was the most accepted form of currency by everybody, and a gold standard we came up after gold standard in 1971, and everybody has their own currency. But right now, to counter dollar, Russia and China are rumored to work on a currency which is backed by gold. So probably we might see that both the nations to counter dollar might come up with a stronger currency backed by gold to counter dollar. Maybe Asia might have their own currency, excluding India, that is backed by gold. Maybe.
Thank you once again for that add-on response that you gave, sir. I have one question once again directed towards Mr. Prateek. Looks like the 5G thing is still, again, very strong question here. Will 5G replace the dedicated connectivity that corporates have now from operators like BSNL, Airtel, etc.? I was unable to make sense. I'll repeat it once again.
So I understand.
Where is he coming from?
So traditionally, corporates have taken what are called as lease lines, which are typically wired either on copper or fiber.
Yes.
For multiple reasons, security being one, but also if you have to connect your data center, you would need a fat pipe. You're not going to get resort to wireless. But I think with the ability of wireless technologies as they've progressed, customers and banks are realizing the value in going. So today, each of your bank branches have 2 or 3 connectivity, because if the branch connectivity fails, that branch is off for the day. So they have 2 or 3 bank branches that are redundancy. But you're seeing now, and we are under seeing as it happens, multiple banks are coming out with 2-3 things and 2-3 trends that are happening. One thing, why do I have to have a VPN network? Can I technologies such as software defined WAN are being implemented, and a lot of banks are now saying it's okay to ride on 5G. I may have one connectivity which is a lease line, but the 2 banks truly want to give a rich experience. If you're going to tomorrow do training on metaverse for your employees, you can't do with that 2 Mbps, 4 Mbps. You need to move to 20s and 100 Mbps. And if you're going to get a 5G connectivity delivering 600 Mbps to a bank branch, we in fact doing a pilot with some of the bank branches where we're saying branch in a box. Yeah, NBR is one of the key projects every bank has, and you have as soon as you get the real estate, the pressure is on to get the bank up and running. How do you get a bank up and running in 10 days? Is one of the things that we are piloting with some of the banks, which is all 5G enabled with all the requisite security and connectivity, which will enable all applications. So you will start seeing proliferation of 5G in banks as well. And lease lines, I'd say no one technology erases another technology. They will exist, but you will now see more and more dominance of 5G.
Prashant, just to supplement that,
Yes, please.
it's quite possible that banks would get around to arranging to having a hybrid approach.
Absolutely.
So use your lease line for your actual financial transactions. Use the backup line for all the other stuff that you want to do, like the remote call center or somebody, a remote expert sitting somewhere else,
Absolutely.
where your customer can have access and talk to him, clear their doubts, etc. So that possible. Otherwise, the redundant line is exactly redundant. It's not being used. It's there. We are paying for it, but it's not being used at all. So this approach may actually
No, absolutely. And instead of taking a 2 Mbps, a lease line which you never use, you'll probably take 100 Mbps or 600 Mbps for 5G and run all your applications, customer applications on that.
Yes,
absolutely.
Fantastic. Any more questions? Yes, we have a question from the participant sitting here.
First of all, congratulations to Mr. Kosi for heading such a great initiative. Question, of course, is related to ONDC. Given that the humongous amount of data is be created for this platform, who is going to own? This is the first question. And in this backdrop, I understand that some of the banks are early moving.
Sorry, I cannot hear you clearly. So if
Repeat that.
You need to be a bit more louder.
it's not on.
Yeah, it is on. The one
This both that is switch on.
Down.
just daba dena usko.
That red ring you have to.
Press the red button.
Red ring you have to press.
Yeah, that's it. Please.
Congratulations, sir, for spearheading such a great initiative. My question, of course, is regarding I understand that humongous amount of data is going to be created on this platform. So who is going to own those data? But that has actually played out to become a very controversial matter.
So let me quickly answer. There is no, ONDC is not a platform, it's a network. So there is nobody who is going to have a concentration of data. Every buyer application will have the data related to their buyer, and every seller application will have the data related to the sellers. Today, one of the challenges that is being faced by the platform approach is that the central platform end up having all the data, and that gives them humongous power of competition, and also they are able to monetize that. The way it is ONDC's architecture, nobody will have a concentration of data. Only the entities who are dealing with their buyers will have that data. So that is, and that gives those entities the ability to make use of the data for their business purposes and their servicing of the client, more importantly, but nobody have a concentration of data.
In that perspective, sir, there is a follow-up that I understand that some of the banks are early movers in terms of having shareholding in this thing, NDC. So what expectation they have? What you visualize that they would have advantage in terms of other banks or not the shareholder of this?
No, shareholding was a way of people coming together and putting the money to create a collective. Nobody has any controlling power. All of them have less than 10%. So, and just because they're shareholding, they have no additional access to information and opportunity. And any entity will have the ability to have equal opportunity in this network, whether you're a shareholder or not.
Thanks for the clarification.
I may be allowed to ask one more question then.
One question. Is there others who want to ask questions? So we'll just allow the others, please. Thank you.
My question is to Koshi sir only. That UPI has taken care of the transactions. Now you have come up with the open network commerce. There is a need for open lending platform also. So it is in the formation stage. ONDC is in the formation stage. Can we build an open network lending platform and integrate with the ONDC, sir?
I understand in the banks is that you're working on open credit enablement network, and how the whole thing will flow is going to be different. But the key thing that is there when you have ONDC, where you have more and more digital transaction, that digitally signed verifiable data that will become a driving force for variety of innovative products coming on the credit side, and even probably sachetized lending extra would become possible. So there is actually a team who is working on developing on such innovation between the banking fraternity, RBI and ONDC and AA and OCAN and so on and so forth together. So we can see this shaping up and probably in the coming few months.
Thank you. Yeah, in the interest of time, we'll take 2 more questions. And one, we'll try and see if we can entertain the guests who have come from Nepal. Please press the button. Yeah.
My question to Sony, sir. Sir, with the introduction of digital currency, will it have some positive impact towards AML and CFT?
Yeah, because traceability is there. But the greater impact will be in terms of like how it changes how banks, like how the country handles money. Okay, today if you look at it, there's a term known as seigniorage. Okay, that is the difference between the value of the money that the central bank introduce into the market, whereas versus the cost or minus the cost of distributing it. Okay? So while traceability is there, AML, CFT, but the greater impact would be like in terms of the saving, the cost saving, the tremendous cost. Today, if you look at any shop or any industry or any business, you look at our banks, how much of their time and effort goes into handling physical cash. The real impact would be there. Okay, like you go to an ATM, if there's a CDM, there would be somebody standing there and stuffing the ATM with the CDM with cash. Okay, multiple transactions. That is the sort of effort and the time that is spent. AML CFT, yes, because there would be definitely be traceability. Somebody already mentioned. So to some extent, like there would be a better controls there. Yes, I agree. But the greatest impact on our economy would be the savings. Yeah, the handling cost, the storage cost, okay, the printing cost. It's actually no one talks about it, but it's really huge.
Thank you, sir. We'll take one last question. Yes. At least we have a lady. Yeah, please.
My question is, we talked a lot of positive about 5G, this and that. So, but since everything has its own limitations, what are the challenges in 5G? And I would like you to focus on both technical and environmental issues that 5G is going to contribute.
So, any wireless technology eventually has to be, so your mobile phone is talking to this 5G tower. That's wireless, but it has to be, that traffic has to be carried back so that I can connect, you can be connected with him. That backbone is a fiber backbone. So while you're talking wirelessly, there has to be a fiber infrastructure close by. So how deep is the fiber? Is a prerequisite. So it sounds oxymoron, but you cannot do 5G without fiber. The depth of fiber. So you could have a good fiber coverage in big cities, but if you don't have a good fiber coverage in the remote areas on highways, then you will not be able to roll out 5G. So that's a technical limitation of propagating 5G. You need to have a robust 5G fiber infrastructure. That's why I said that Geo fiber is in fact probably the biggest fiber infrastructure in the world. So it's not a technical limitation of 5G, but to truly enable 5G, you need a equally robust fiber infrastructure. On the environment front, I think all of these technologies have been tested for years, and I don't want to get into the controversy of EMF but I think it's been proven time and again that the radiation levels are far too little, and they are EMF certified. So that's what I would talk about. The other benefit of the wireless technology is the fact that some of battery charging, that's one of the key requirements. So as battery technology improves, as devices start consuming lesser and lesser power, you will see that benefit on the environment. Plus, you're not to lay fiber, you have to do a lot of digging, which causes sound pollution. That would kind of get to some extent reduced.
Just add on to what she's asking.
Yes.
We also know that 5G is not fully about the hardware part of it. A lot of software also goes into it. So, I mean, the rollout of 5G is being thought through in a different way in different markets. How was that India is having an edge in 5G? When the finance minister of the country makes a statement in a global forum that 5G, India will be a leader. What made her do that statement? And can you go more to the technology part of it in terms of the software prowess that India possesses in 5G?
So, a couple of comments here. We've leapfrog technologies, and not just in telecom, but in across industries. I think banking is a classic example where we've leapfrog multiple technologies. Some of the Western countries are still on legacy platforms. So, so two things. With every introduction of new technology, and I wanted to comment on Raza when he said, we don't have benchmarks. Probably we don't have global benchmarks because we are creating benchmarks. So there was a time when we looked forward to, looked up to West, or to say what's happening there, and we'll copy it. We're now pretty much setting the trend. So we're in the new world of India, I think we are more and more less likely to find benchmarks out.
So just like in 4G, you had a CDMA, you had a GSM.
So what's happening is 5G in India is happening pretty much at the same time it's happening across the globe. Two, for years, it was the sole, what should I say, Jagir of some of the Europeans, the Ericssons and the Nokias of the world, and then the Samsung and the Huawei's of the world. Now, enough and more core software technology, because see, at the end of the day today, what's happening is everywhere is becoming software defined. The hardware that you buy is actually pretty much a dumb device, and all the intelligence is going or coming to that hardware through software. So that's where India is always is a huge software exporter. So a lot of intellectual property of 5G is being developed in India. In fact, Jio makes India the 5th country only in the world, after Sweden, Finland, China, and Korea, to have an end-to-end 5G stack built in India. So, and since more and more intelligence is moving to cloud and software, that's where India always has had strength. So that's why you kind of saying India will truly
from that.
Absolutely.
Thank you so much, Mr. Pradeep. We'll take one last question, because in the interest of time, you also have a lunch and a follow-up class, and there are speakers who are also sitting here and guests lined up. One question, sir.
I'm from Nepal, and banks are connected more or less. Primary connection is through fiber network, and the redundant connection is also mostly fiber where possible. If not, then it's wireless. So we also use Mbps connectivity. But speaking of India, if the banks in India were to adopt 5G network technology, what is the cost or what is the investment that the banks would have to make switching from the current network to 5G network, more or less?
So if you think of it, it will only make it will give immediate returns to the bank. Today, a 2 Mbps costs 20,000 bucks a year. How much do you pay for your mobile phone? 200 rupees a month, 300 rupees a month. So that's the same connectivity that will get enabled on 5G. You may have to buy one device for security purposes, but it's a no-brainer. It's not going to be saying, oh, I have to I have to do a huge business case. I have to take it to the board because it's going to cost millions and millions of dollars to do that change. It won't. In fact, it will start giving you benefits right from year one.
Thank you so much, sir. Thank you to everybody. Now, State Bank Institute of Leadership strongly believes in supplementing classroom learning with other pedagogy, like the guest talk by thought leaders and the panel discussions like the one that you have now. So as a faculty, I felt this panel discussion gave me tremendous amount of learning. And I trust the audience who are sitting here in the class, as well as who are virtually connected, had some aha moments. Now, we will continue to design and deliver such events in the future. So keep looking out for our emails and flyers. Notwithstanding that, you are still logged in. Please suggest a couple of topics that you would like us to design and deliver. We would be eager to tap into that. I would now invite Dr. Kanak to close the event with a formal vote of thanks. Over to you, Dr. Kanak.
Thank you, sir. Coming to the completion of event, I thank all the participants, spare their time, panelists for sparing their knowledge and valuable thoughts and enlightening us. And my sincere thanks to our director, sir, and dean, sir, for always being a strong support and motivation. I thank our faculty team, technical staff, admin team, and support staff for and each and every person who was instrumental in making program a success. Thank you so much.
Thank you.
Thank you.
Thank you. Thank you very much.
Thank you,
Thanks, everyone.
Toshi, and thank you, Mr. Raza.
Thank you very much.